According to the Daily Maverick, Eskom and Sasol have agreed to collaborate in the quest to find new gas sources in order to secure South Africa's supply in the future. The power utility and the petrochemicals company have signed a memorandum of understanding which will pave the way for their collaboration. To discuss this, I'm now joined by Jaco, the Executive Officer of the Industrial Gas Users Association of South Africa. Jaco, a very good afternoon to you. Thank you so much for joining us. Now, talk to us about the current state of natural gas availability in South Africa and just the factors that are contributing to the concerns about the country possibly running out of natural gas resources.
Thanks, Katlego, and thanks for having me on your show. Indeed, I mean, the gas cliff has been coming for some time. Since about 2018, industry have asked questions towards Sasol and government, how are we going to bridge this particular issue? And the nexus of this is really around the depleting resource that we're currently reliant on in Mozambique. So it's a natural resource which is that's fast reaching the end of its life. And that resource has has actually already started to decline. Sasol is certainly managing to balance out the flow at the moment, but it will not be able to do so beyond June 28. Now, in the absence of any particular gas position, policy, or domestic resource for gas that could certainly fulfill that gap, we will be reliant on important liquefied natural gas, or LNG as we call it. The problem with that is not the availability of LNG, but it's the ability to land that LNG on our shores. It requires significant investment, big infrastructure developments, and currently we're reliant on the fittest project that there is, and that is the one by Total Energy BGC in Matola. It is a very critical issue, and we have about 9 months in which we need to conclude these long-term offtake agreements. And these 9 months, of course, will then, once concluded, will provide the developers to start building these projects, physically building it. So, and that takes in itself about 3-4 years. And that brings us to that particular point, or gas cutoff, as we call it, or gas cliff. And it is very critical. There's a lot hinging on this. Industry is very much reliant on gas energy. And the prospect of having no gas, of course, is problematic. It is a race.
I mean, we will get into the prospect and the implications of us running out of gas. But just to touch on this MOU that has been signed between Eskom and Sasol, talk to us in terms of how it aims to address these challenges. And is it not a tad bit late, given this timeline that you've now put out for us in terms of we knew about this from 2018 and already by 2027, we should be reaching what is day zero, or what you now call a gas cliff?
I don't think it's late for Eskom, but I think to answer that question, one needs to consider the 4 sort of buckets of LNG demand in South Africa. First and foremost, today you have, for industrial demand, the members that we represent, about 50 to 60 petajoules of LNG requirement. It is that which is actually seeking at the moment to find its own solution, and that is simply in the absence of anything concrete elsewhere. The second bucket for demand of LNG, which is very apparent and possibly real, is Sasol itself. Sasol, of course, indicated or stated that they don't or can't use LNG in their processes. However, they can use some LNG for power generation to power their plants. The third bucket, of course, a very important one, is Eskom. Eskom, we anticipate, will within the next 10 years become the biggest direct and indirect consumer of LNG, purely because of the significant gas to power play that we see in South Africa in the coming years. And then, of course, the fourth bucket linked to the indirect Eskom play is then the independent power producers or private power producers, which will also generate gas to power. The problem here is that Eskom itself, that demand is still not defined. And I think this MOU talks to that particular prospect, the Eskom demand project. The risk here is that we start conflating these particular demand buckets into one area of responsibility for which Sasol is the sole, or Eskom is the sole spokesperson, and that does not bode well for the development of the market and the security of gas energy.
Speaking of that market and just the security of gas energy, I mean, industries that do need this gas are steel, chemicals and glass. And we know that the decline or the consequence of not having this resource affects many jobs. About 70,000 jobs are contributed to this, and about 500 billion rands a year is contributed to the domestic industry. So just talk to us about those potential implications of South Africa running out of this gas. But most importantly, how can proactive measures, strategic partnerships such as this MOU and others that sit outside of Eskom just ensure the resource diversification and help mitigating the risks of us now having to run out of the supply of gas?
So I think first and foremost, the implications of having no gas are quite severe. The industry, of course, steel, ceramics, glass, as you said, but it actually cuts much broader than that. You know, from the bread we eat, the baked bread that we eat from the shelves every day, some of that is baked with natural gas. Of course, you know, it is consumer goods, it is the aluminium industry, construction industry, mining, and then, of course, those sectors that you mentioned. They are a significant contributor to the economy. We estimate that there's about 70 to 80,000 jobs related to these industries of our members. And of course, the economic contribution in the region of about 400-500 billion rand a year. So it is an absolute significant sector. The problem is the substitute for natural gas is not readily available. You know, these industries use gas at such a volume and scale, of course, that you can't simply move to something else. I mean, there are technical implications, supply chain implications, and the ability to deliver alternative energies are certainly limited. Now, the significance of this particular MOU still needs to play out for the industrial sector. We're certainly not sure where and how it will land. And we wish to continue our engagements with the Minister of Energy to understand exactly what does this mean for industrial gas users as such. We understand that Eskom has got a future need for LNG, and for that they opted to partner with Sasol for particular solutions. But Sasol, given the size of its own LNG consumption in future, cannot be the sole spokesperson for the market going forward on LNG developments. And therein lies the need to better understand how this will play out. Industry at the moment is particularly considering the aggregation of gas of its industrial members in order to create that transactional vehicle and ability to be a counterparty for these significant infrastructure developments that are required to bring in imported gas. So it is on that basis that it is proceeding, and it is quite far into this particular process, I think much further than Sasol itself and Eskom. So it is very important that these three sectors actually sit around the table and discuss how do we get the most promising LNG deal for South Africa. It is about the molecule on the one hand, what that costs, in other words, the imported molecule. We understand the minister is focused on the development of a supply proposal on a country-to-country level with Qatar, which sounds promising in itself. But we need to really understand at a deep commercial level what that means. So I think there's still a lot of work ahead. Industry is advancing in the absence of anything else that is clear and discernible. And it can certainly benefit from also having an alternative on the table to consider.
Jaco, just in closing, I am running out of time. I mean, you mentioned earlier on just this timeline in terms of us being aware as early as 2018 with regards to this decline of gas. 2027 is when we might reach day zero. The minister had cited that it's too late to build and run any natural resources because that takes up to 10 years. You mentioned the collaborations with Qatar. Could we look into exploring Mozambique in the meantime?
I think if you look at domestic gas, LNG is a global commodity, whether you buy it from Qatar or from America or from Australia or anywhere else, or even Mozambique. You know, one needs to realize that these are pegged at global commodity prices. So we don't necessarily anticipate a significant commercial benefit in the country-to-country gas space. However, domestic gas, or the ability to use and utilize domestic gas produced domestically, is always more beneficial than imported LNG. So we are actually compelled to import LNG because of the energy or gas energy policy poverty that we're just coming out from for the last 15 years, where we should have actually developed domestic resources. We have the gas in the ground. We certainly do. But we don't have that available. So for the next 10, 15 years, rightly as the minister said, we would be certainly reliant on the import of much more expensive LNG.
Sure. That's quite concerning, given that we do have the natural resources within our shores. It's just a matter of infrastructure that doesn't exist. Jaco, thank you so much for your time and for joining us this afternoon. That's Jaco from the Industrial Gas Users Association of Southern Africa.